Recording in progress.
What's up, everybody, and happy Monday. Welcome back to another exciting edition of Profits at Noon. We have opened up the room just a minute early to give everybody a chance to get in, get settled, find that great seat. Awesome. If you're joining us over on the simulcast on YouTube, want to give you a shout out there as well. Welcome. Hope everyone had a nice weekend. Hi.
How's it going, everyone?
Welcome.
Got a new name there.
Yeah, some new faces, some familiar faces. Give everybody just a minute or two here to get in and get settled. See some more of our regular, usual suspects come in. Hi, Hal. I hope you had a nice weekend. It's good to see you. Michelle, welcome. We're going to get started in just a minute here, everybody. If you are new to these sessions, I just will quickly point out Profits at Noon is live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern Time. We are simulcasting this broadcast over on YouTube. If you're watching on YouTube, you'd like to join us in Zoom, check for a link underneath the video. You can get in here into the VIP section with some bottle service. Awesome. So it's just 1 minute after the hour here. I think we have a few more people trickling in, but we'll go ahead and start firing up the beginning portion of this session and get things moving. So welcome, everybody. If you're new to these sessions, my name is Nate. I co-host these sessions with our very own Richard Krugel, who you'll see in just a minute here. Just to give you a quick outline of what you can expect in these sessions, we're going to show you what we call our levels to lock, which are the levels that we are currently stalking. And this is across 6 of our favorite futures markets. And of course, you better believe we'll be leading with the ES here today. So in addition to all the cool live analysis, all the insights, and being able to pick Richard's brain, we're going to give you actionable levels you can stalk along with us. And then, of course, join the follow-up sessions and see how this analysis plays out in real time. So this is something we're kind of all sandboxing together. So if at any point throughout this session you have any questions, please feel free to fire away in the chat, and we will make sure everybody is taken care of. So fire away, anything comes up, anything at all. There is no such thing as a stupid question. One other quick thing I want to note is we do have a special guest in the house for the week. Some of you may remember from prior sessions, it's probably been, I'd say, a month and a half or so at least since Tony Edwards has been with us here in Profits at Noon. But Tony Edwards of Trader Smarts is back in the house. So as soon as Richard is done with today's analysis, Tony is going to take the reins. He's got a few very cool things to show us. And if you're new to Tony, if Tony is new to you, I should say, I'll give you a quick background on him. Tony is an independent trader who is based in Seattle, Washington. He specializes in trading the ES now. He, for a long time, subscribed to the YM, traded E-mini futures there for a very long time, almost 20 years if I'm not mistaken. Obviously, things changed. There was a shift in 2020 with the pandemic, and obviously we've all seen the effects of that. But Tony has been trading the ES religiously ever since. So he has a great background, a really cool history, and lots of experience. So he's going to be jumping in here as soon as Richard is done with that analysis. So let's get things moving, everybody. Thank you for joining us. Thank you for being with us. Let's kick off today's Profits at Noon session with the man, the myth, the legend, a King Richard Krugel. To you, sir.
I don't know about King, Nate, but thank you very much.
It has a good ring to it. You know, I'm sticking with that one. I like this. I even internally,
okay.
when someone asks me about Richard, I say, King Richard?
Thanks anyway.
You got it.
All right. Welcome, everybody. I hope you all had a great weekend. We'll, as always, go through our favorite markets, like Nathan said. Not too much to update since my last session on Thursday. A few things have changed structurally on some of the markets, but obviously we'll have a look at that. And then, just a quick update, and I'll hand things over to Tony. He's got quite some interesting things to show us for today. But as always, before we do get started with today's session, please note that all information is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or forex. All right, so let me get rid of that screen. Where is that gone now? There we go. And I'll just disappear off screen for a while during the analysis part. And guys, if you've got any questions, please don't hesitate to drop it in the chat box. I'll be more than happy to answer that for you. All right, as always, we'll be going through the ES, the NASDAQ, the WAM, Russell, gold, and crude oil. I've also got some bigger picture charts. I don't know if we'll get to that today unless you guys want to see them. Just like keeping tabs of where the market is at on the bigger picture, i.e. on the daily time frame. Again, mostly just looking at the 4-hour time frame here with a blend of my market geometry techniques, a bit of pattern analysis, some wave counts applied loosely, as well as also important levels to lock, right? So just a quick recap here on the ES. During these sessions, we've been following this move to the upside. Actually, prior to that as well, see all these boxes or previous areas where, with market geometry, which I've deleted now, at areas where potentially could see reversals, etc., etc. But very importantly, in this current sequence that has been moving to the upside in the ES or around here, I think this was the 13th, or why is it doing that now? Yeah, some glitch here on my screen, sorry. We had the zigzaggy behavior to the upside. I was mentioning that could potentially be a leading diagonal to kick off a potentially much larger move to the upside. I've also got this channel on up here. I'll explain a little bit what I did with that prior. Oh, well, give you a bit of recap because I see there's quite a few new names in here today. But in any case, I've been saying for a while that if we had the first sequence, a leading diagonal to the upside, expected a second wave correction, that we're potentially going to see a strong move to the upside. That did occur. And this sort of high that we found here actually found resistance at the upper channel line. And then since then, we were like expecting a move to the side, downwards, and with another move to the upside. Now, you know, this is the thing with trading, anything can happen, right? I was marking my third wave up here for time, expecting a deeper correction. I even had it over here at some stage. And then it was, I think, a couple of weeks back that I mentioned that it's some sort of pattern, i.e. what we call an expanding triangle, or some traders might call this a megaphone pattern, was sort of jumping out at me, meaning that we're potentially going to see a 5-wave sequence, mostly like 3 waves or combos of 3 waves. We have a first wave for an A, a B, a C, a D. And I think it was around about this area. We were actually having one of the sessions where price was just pipping this low, and I was saying that we could potentially see the end of this correction very, very soon. Now, that was pretty well done on that sort of forecast of things. But then we expected a very strong move to the upside, and then that potentially complete that 5-wave sequence that we've been tracking for quite some time. The expectations that we could see a very hard bounce, that did occur, but since this high here, around about, when was this, on the 5th of May, price started running sideways. So whatever this is, the sideways movement we're seeing, nonsensical, up and down, up and down, up and down, in a pretty large range over here. I'm still seeing as corrective, and I'm still expecting another move to the upside here. If this does occur, I would like to see price take out today's R1, whether that happens today or tomorrow, at 41.60. I think if it does take that out, that might potentially mean that this move is finally taking place. And we can't really say that this is an expanding triangle until price actually breaks these highs. And that would actually then confirm that the pattern was indeed an expanding triangle. But all the expectations were sort of correct. The price behavior, once price pipped this previous low, before it actually did that, was sort of in line with expectations and the behavior of how typically an expanding triangle ends. But, we haven't seen a nice, monstrous, strong move to the upside, unlike the NQ, which has actually still been printing new highs to the upside. So I'd like to see a move above today's R1, 4,160. Again, whether that happens today or tomorrow, who knows? Price might just continue trading sideways here for a while. What would need to happen to completely invalidate this pattern? Well, a strong decline, again, that breaks these lows over here, and then obviously something else is going on, and I've just been seeing things. But, we can always just try to stay on top of what is happening with price action, the expectations of what a expanding triangle should look like, where it might end. That all sort of played out. So I'm still sticking with that price might still move higher to complete that final fifth wave. Now, if that does happen, that would then complete this 5-wave sequence to the upside for me, at least. And I would then expect potentially a deeper correction at some stage that might retrace a decent portion of this move to the upside. So I'm not saying this is 5 waves higher. You know, in the bigger picture, I've just been tracking the sequence to the upside since around the 13th of March. So that's my view on the ES. And then we also have the NASDAQ. Also had this standard pitchfork on my chart using the 3 most prominent anchor points prior to the strong move that's also started on the 13th, I believe, of March. And we had this very strong move to the upside. And I've had this pitchfork again also on there for quite some time. And still very fascinating to see how these pitchfork lines are sort of controlled or contain price action. There was a recent scenario where price broke below what we call this lower rate warning line. It's all retested again, moved lower again, retested again, moved lower again. But quite often when you do use 3 pivot points, as you would obviously always do, or anchor points, as I call them, to draw a pitchfork, and quite often you do use the 3 most prominent ones prior to a very strong move to the upside. Even though price actually leaves the boundaries of these pitchforks sometimes, it's quite cool to see how they still respect the same angles. And what I did here was just basically run a ray parallel to, you know, could have drawn into these median lines here, or this lower red warning line, as I call it, and projected to areas where price previously well, in this case, underthrow an area. And you can see that just projecting it to this low, how well price is still being sort of respecting that same angle. Now, I did have, who was it? Donald, I believe, last week that asked me something about the NQ. If I can just do a sort of a bigger picture analysis for him. If it wasn't you, I'll just do it anyway. I did prep my higher time frame chart here for you guys. And just to give you a very quick overview, since this decline that started obviously last year, yeah, there's obviously a very strong move to the downside. Now, if you use market geometry on higher time frames, you're trying to find what I call the operating angle of ascent or descent, whatever the case might be. In this case, just using that high to this low, and I use this low over here. Now, price did leave the boundaries of this again, but like I did over here, you could, for example, where price overshot that area, you use the same angle projected to these highs. You can see those 2 little highs sort of run at the same angle. We had support, 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 support till finally price moved higher again. I mean, you can even go and project these on these eternal sort of little swings over here. Just to see if the actual angle of that slope, or let's say the angle and the slope of the, in this case, a channel, was, you know, working out and continued to work out. And we even had this beautiful high over here. But then price left the boundaries of this channel, moved to the upside, and basically just in this case, using the 3 most prominent anchor points. And this is from October, 2022 to this high in December 2022 to which low did I use here? Yeah, the 6th of Jan low this year. And we can see, although price didn't really test a lot of these lines properly, that it did contain the price action to the upside pretty well. And it's sort of been fluctuating above and below this center channel line here. Sorry, center median line, which is quite often an occurrence that you'll get. In this case, price even tested this lower 50% dash median lines, I call it here. Now, from a retracement perspective, price sort of been hanging around here by the 38.2% retracement, around 13,167, and that's just drawn from that high, the all-time high, to this low that occurred in October. And yeah, it's not even reached the 50%. So I won't say expectations, but I won't be surprised if price continues sort of fluctuating above and below. Let me just get rid of that magnet mode here until it either hits the 50% and then get a deeper decline or whatever the case might be. But still very bullish, in my opinion, on the NQ. You have to look at, again, the smaller time frame, the 4 hour that we follow here. Again, price riding the same angle, finding support, finding support, finding support. Broke again at the current candle above today's pivot point at 13,391. Could potentially reach R1 at 13,473. Again, if we see a break above there, we might even see a retest, whether today or tomorrow or this week, of these potential, this warning line that we have over here. So we'll look at things again on Wednesday and see where price is at. Again, once we have this newsletter finalized, then, you'll have a bit more of a game plan of how I expect price to behave, where targets might go in our interim in a day trading sort of perspective over the short term, and which of these targets I believe price might gravitate towards. So that's the NQ, still expecting higher prices. YM, a bit weaker, right? Also pretty fascinating here, just using the 3 most prominent anchor points prior to the strong move to the upside, but this case using a shift pitchfork instead of a standard pitchfork like I did on the NQ. Very, very good example of how price continuously respected these angle lines. And it was sort of around about mid-April that price actually hit this upper red warning line on the YM and started a deeper decline. Then we had a retest of that high, just pipped it, price fell all the way down. It retested the center median lines. It just underthrown this lower median line, retested center, and sort of been trying to, find support again, and then finally broke below it. So I think, when was it? Last week, Thursday, I was saying price might have a retest of that area, but be careful. We'll need to see a strong close above that. It sort of overshot that again, but again, found resistance and moved lower again. So, yeah, interesting. The YM pretty weak. NQ definitely leading the pack in the indices and strength-wise, and ES still, sort of in a sideways range there. When that's going to break out, who knows? Just have to wait and see. Russell, on the other hand, I've been saying this for quite some time. Not my favorite market to trade. Good luck trying to figure out what's happening here from a pattern perspective. Is this all corrective? Obviously, it looks like it's in a range, but is it potentially a triangle? I don't know, guys. It's just been very whippy. Pretty large range, actually. Very strong V-shaped bottoms followed by V-shaped tops, like up, down, up, down, up, down, up, down. There is a possibility. I still think that this might be potentially a triangle. If that is the case, I like to see price break these highs and fail at some area again, come lower, and then move up again. What's this going to be? 1, 2, 3, 4, and then do this again, and then we see a decline perhaps at a later stage. I just don't know. Too early to say that it is a triangle, but again, good luck trying to figure out what's going on in the Russell. That being said, price already reached today's R1 at 1,759. Potentially close above there. We might see another move up to R2. If this is some sort of a triangle, like I said, too early to call, but I now expect that we're going to see a break of this high, see a failure, a decline that does not go below this low, another move higher, and then potentially a larger decline at a later stage. But anyway, too early for that. So I'm just going to leave the Russell alone for a while. I will obviously update it for those that do trade it, but just have absolutely no idea what's going on with this. From a swing trading perspective, I don't know if you're trading these ranges on the tops and the lower sides of things. That might be a way to do it, unless you got an intraday sort of trading strategy, just going for smaller sort of targets, whatever the case might be. All right, and then gold. Also fascinating sort of example of our market geometry or angled support and resistance worked really, really well in gold. We've also been tracking here what seemed to have been, I would say this was a triangle, and it was around about this area here where I marked this red box that I said if we had a failure here, and price fails to then break these lows over here, I hope you can see my actual cursor on the chart, that we're potentially going to see the end of an E wave. That also worked out really nice. And it wasn't until price actually broke above this that I drew in this channel sloping to the upside. And since then, price has been respecting these same angles beautifully. Even areas where we had an overthrow above the upper channel line, if you draw a line parallel to that, projected to the area where it's overthrown, that spike we've seen there, I mean, came within a tick or so of the what I think was a fifth wave potentially. Even when price moved lower, it was riding this lower channel line for quite some time. And here also a great example that if you were to draw a ray parallel to the channel lines, we can see how well price has also been respecting the same angle. Now, from a wave count perspective, I've been counting this, and obviously same thing I've did on the ES. We had a 3 here, thinking this was going to have a fall, then a 5, and I had to change that because we had a 3-wave move to a new high instead of a 5-wave move. So I counted this then as a potential 4th wave correction, expected that if we're going to make another move higher, which we did get beautifully, that a deeper decline might follow. Now, even on the way down, price found support at the center channel line, broke below it, retested, couldn't stay above it, got rejected. Where did it reach? I think it was last week, was saying be careful. Price was pulling back to the center channel line, that we might, price will have to really close hard above that. It didn't. It beautifully rejected again, and where are we at again? At the lower channel line. So this angle and slope is still working out, although I am expecting a deeper decline. After a 5-wave sequence, a potential deeper decline that could retrace a decent portion of this sequence to the upside that we've been following. It all depends. Gold might just be very strong. It might just be doing first sequence, small second sequence, another big one to the upside, or just continuously grind and stay within this channel for a long time. So I think, was this the end of a correction? It's a little bit too shallow for me at the moment to have thought that, or start thinking that this is actually, the deeper correction I've been waiting for. I would really like to, I won't want to see it, but if price does break strongly below these median lines, channel lines, this one and the lower one that's been acting as support during these underthrows, then I think that will raise my confidence that deeper correction is still underway. Right, so price been above today's pivot point for most of the day, around 2016. It's found a little bit of resistance at R1 at 2027. We do get a break above here. We might see a move to R2, although this does look on a smaller scale like a 5-wave sort of sequence. Maybe we're seeing an A, B, C that could extend higher, and then maybe a deeper move to the downside again. So again, we'll recap everything on Wednesday, see where price is at in relation to all of the market geometry, our levels to lock, etc., etc. But on gold, still thinking that we could potentially see I wouldn't say much deeper, but potentially some more downside pressure on gold. Right, that brings me to crude oil. Just a quick recap here as well. We've been following since mid-March a 5-wave sequence in crude oil. Normally, if you see a 5-wave sequence, you would expect a decline and then another move to the upside. Now, we had some sort of a meltdown here. And then when was it? Beginning of May, price pipped these previous flows that was set around 20th of March, and we've seen a very hard reversal back to the upside again. Now, the only thing for me that can trace out a 5-wave sequence and be corrective in nature is that of a C wave of an expanded flat correction. And the only sort of count that I can work in here, and this is on a bigger picture, is that sort of from here around about December 2022 that we've seen a 3-wave move for an A, a 3-wave move for a B, and then a 5-wave sequence, which is this 5 waves I've been counting pretty well to the upside over here. That was actually a C wave of an expanded flat, and then we've seen this decline to the downside. So yeah, I'm kind of, all of this mess in crude oil here Is this all corrective? Who knows? But if price is just correcting right now, I do expect that we potentially could see another break of these highs that was set around the 10th of May, etc. I mean, there's been 1, 2, 3 highs at this area over here. We've had a 38.2 retracement around 69.83 where price just reached. It was also in a 5-wave sequence. Now, this might just be sort of a reversal of that, or just the opposite sort of example of an expanded flat. I won't say opposite, but a bearish example of a correction. And what I'm thinking here is that if price is bouncing hard from this area, is that we've potentially seen a 1, 2, 3. And if you look at the 60-minute chart, you could force an ABC in here, a 3-wave move to the upside, and then a 1, 2, 3, 4, 5. So what I'm trying to say here, for those not familiar with this type of analysis, that might have been temporary support, and that price might now be gunning for these highs that were set on the 10th of the same month. All right, so but for that to happen, price will have to continuously go higher. Obviously, if it fails here and we see another strong decline, then I'm obviously wrong about this, but I'm viewing this entire thing as corrective to the upside to retrace a decent portion of this strong move that we've seen to the downside here, right? So I'm still thinking that this whole thing here might still just be a correction, and then we get another large move to downside later stage, perhaps. So, again, not really trying to forecast things too much, just really looking at price action, price structure, all those sort of things, and a lot of wave counts, and then see how price trades in relation to, like my fib levels, just quite often like looking at what patterns, corrective patterns look like and where they tend to terminate, etc., etc. So sort of at an area that sort of validates that idea that this might be the end of a C wave, of an expanded flat, and that we might see another move higher again. Again, we'll recap everything again on Wednesday. But over the near term, think that crude could potentially move higher. But let's see. We'll have a look at everything again on Wednesday again. So if there's any questions for me today, then please let me know. Otherwise, I'll hand things over to Tony, which is waiting for the end of my blah, 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 my analysis.
Awesome. Well, thank you so much,
going
Richard.
in for half an hour, already.
We had a quick note in there from Michelle. I'm not sure if you had a chance or if you saw that one just yet, but she had some insight in there, and I wasn't sure if you were able to tackle that.
Okay, I would think that the consolidation breaks the megaphone pattern and would be looking for a signal as to direction after coming out of the consolidation. I 100% agree on that. I know that you've been in these sessions, I think, sort of from the beginning, Michelle. And yeah, it's just very interesting, looking at the behavior of a megaphone pattern. I was saying that price could not move into this area. That would have invalidated it. That did not happen. Not that I'm some sort of genius. It's just, you look at areas where price should not move towards. That didn't happen. So that was sort of check mark number one. Price did not do that. And the same thing was the expectation of what should follow if that pattern has indeed ended. And indeed ended, you can only really say it was a pattern if price would then take out these highs. That actually confirms the pattern. But obviously, sort of, you're trying to front run and think what the market might be doing, where such a pattern might end, and the sort of expectational behavior of how megaphone patterns quite often they end very aggressively or just out of the blue. And you have a very sharp reversal to the upside. So that is also exactly what we got prior to this actually happening. But again, we've been stuck in the sideways movement over here. But if this is or was the end of that expanding triangle, the megaphone, as you would like to call it, then yeah, I'm just viewing this as corrective. But true, we'll have to see price break out of this range to get directional confirmation. We might still move a little bit lower We're really taken out 50%, 61.8. I'm still working on the assumption just because of the behavior of how price ended at this area here. And we actually were looking at price pipping this low during that session. And, and the expectation of what might happen worked out. So I'm just viewing this as consolidation, but you're right. If price then breaks out properly, either to the upside or downside, that should give, in my opinion, at least a directional confirmation. Whether I'm right or wrong about the pattern in the end, we'll just have to wait and see.
Sure, fair enough. Well, thank you so much, Richard, and thank you, Michelle, for throwing in that insight. And it's always great for us to be able to discuss and really work through this stuff together. So very much appreciated, both of you. Thank you very much. And then if we have any other questions for Richard, just feel free to fire away in the chat if anything comes up. We're going to keep things moving for now, just to give our friend Tony a chance to make sure he has enough time to get through what he wants to share here today. So Tony, without further ado, I know you're here waiting in the wings with us. This is another man, the myth, the legend, one Tony Edwards, who we're very excited to have back in the house. So without further ado, let me get out of the way here, and you can take us to the end of the session, sir. I'll check in for Q&A, but to you.
Awesome. Sounds good. Thanks, Nate. Thanks, Richard. Just want to start off where we left off last time and talk about this law of motion setup that we had discussed. So first of all, risk disclaimer: futures trading involves substantial risk of loss and is not suitable for every investor. An investor can potentially lose all or more than their initial risk capital. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. So just to recap, we're going to look at this trade setup that we looked at last time. I call it the law of motion. The last time I was on Profits at Noon, we talked about how this applies to candle structure. Today, we're going to take a live look at today's ES chart, and I will show you guys how it applies to rotations. And then I have a special offer that is available to Ninjacators clientele. I will give that link as well. And then I will talk about a small group mentoring program that is starting on May 22nd on Monday. So let's just get into this setup. I want to make sure, and also if there's any questions along the way, just go ahead and type them into the chat. I would prefer to take them in real time versus at the end. So just know that. And for some reason, there we go. All right, I want to make sure I can see the chat. Yeah, so if there's questions along the way, just type them in the chat. I'll answer them in real time as we go along. So the law of motion trade setup is based on Newton's 3 laws of motion that describe the relationship between the motion of an object and the forces acting on it. So in this case, the object is the price of our product that we're trading, whether it's ES or CL or whatever, and the forces acting on it are the market participants. So, the law basically states that an object will remain in motion or at rest unless acted upon by a greater force. So there's 2 parts to this setup. One is based on candle or bar structure, and then the second part is based on swing highs, lows, and rotations. So the last time that I was on Profits at Noon, we talked about the candle structure part of this. And today I want to talk about the rotation. So I won't recap the candle structure part. Second. I won't recap the candle structure part, but you can go back and watch the previous recording of that. So just here's the chart of the ES. This is today's ES right here. Here is back on last Wednesday, we had CPI, and really for the last, just talk about ES for a second. So really for the last 3 weeks, we've just been stuck in this 4150 range. And since we had CPI, we've been stuck inside of the CPI high and low. So, here's Wednesday CPI. This is Thursday session. Friday session, we put in this low right under the CPI low. And then we quickly reverted back up. And now here we came into Sunday's Globex Open right here. And, here we are trading right here, right at this 41.40. So let me share my execution, one of my execution charts. And let's look at what I mean by swing highs and lows. So when you're looking to execute and you're looking to fade, so can you see my execution chart now? Okay. So when you're looking to fade against a level or execute at a level, you can, simply have an order at the level with the risk on the other side of it. That would be a fade of the zone. Or, there's many different ways to execute, right? But when a market's trading into an area and you don't want to just take the opposite side of that trade, because like if we're coming down into an area that you're looking to buy, sellers are obviously in control at that time because price is moving down, right? So one thing that I use is what I call the law of motion. And I do this based on candle structure, but also based on rotations. So all you're simply doing is looking for a greater rotation in the opposite direction. So if you're looking to get long and we're coming down and we're making these, here's Friday's retrace high, right? And this is Globex Open again on Sunday. So if you're looking to get long this area, and I don't trade right after Globex Open, I'm only trading the cash open to the European close. Just for purpose of example, you're watching price. So once price comes into your area, it could be one of my levels or your own level or whatever, you're looking simply for a rotational high that moves above the prior high. So this would be your minor swing high. And then inside of this, you have these small rotations. So like these little rotations right here. So this is the last rotation high before we made this low. So in this case, we tested into the zone, buyers stepped in, and we had this, push up above all of these consolidations. So it doesn't really give you an entry down here, right? So just moving forward in time, because this is important to understand this concept. So, coming from this low, we pushed into this rotation high, rotation low, rotation high, rotation low, rotation high, rotation low, and now we start one-time framing up on rotations. So now, rotation high, rotation low. Really, there's minor rotations taking place in this move, but you can say rotation high. So now that we've come in, say you're wanting to short this area, but you don't want to just step in front of a market that's moving, that's where buyers are clearly in control, right? The only reason we're pushing up, the only reason price goes up is because it's looking for sellers. So buyers are in control, buyers are pushing this up. Now we have this rotation high, rotation low. Let's expand this out a little bit. A new rotation, rotation high, but it doesn't take out this high, small rotation low, rotation high. So now we have a new high, no new low yet. So what you're looking for is a rotation low. Yes, you can. Look at screen to go to the chat. So you can support. Okay, this is in YouTube, but so you can use support and resistance on Heikin Ashi candles. Yes, you can do that. You can use my indicator on any type of candle structure that you want. So rotation high, rotation low, rotation high, rotation low, rotation high, rotation low, rotation high, rotation low, rotation high. So we've traded through the entire range short zone without being able to make a new rotation low. So what this is doing is keeping you out of a trade that's not going to work. So rotation low, now rotation high, rotation low at the top of the zone against this prior consolidation, rotation high, rotation low, rotation high. So if you're still looking short up against this area, right, you've stayed out of trouble in here, but since this is an area that we can still expect to be defended by sellers, just for this example, say you're still looking short. So now we have a lower high But then we go make a new rotation high. So now new rotation high, rotation low. And then we'll start making these smaller rotations up into this high. This is the eventual high. Rotation low, failure to take the high. And then we have this move down under the rotation low, using this as the prior swing low, right? So there's smaller rotations inside greater rotations. Then you have things like swing highs, swing lows. So rotation high, rotation low, rotation high. This is the first sign now that sellers are starting to take over this whole move up, as we're getting new rotation lows, rotation high, rotation low, rotation high, and now we have an actual new rotation low right here, right under these rotation. So now we have a new rotation low, a failure to take the rotation high. So now what you're doing is you're going back on your chart at the move, the greater move that just took place. And now you're saying, okay, sellers are starting to take control because you can see it in the price action. And what I do is I'm simply looking back at the consolidations that were formed. So these highs and lows and consolidations to pick a spot where sellers now will likely defend on the test back up. And I'll show you the trade that I took in ES this morning long in just a minute here. But so now you're looking back in time. So here's a low, right? Of this, the first low that was made after this rotation high, it comes in right here. If you just draw a line with your cursor, you can see that that's where sellers step in here. And this chart we're looking at, by the way, is a 128 tick chart of the ES. I use a very fast execution chart because I want to be able to drill in to the really finite detail of what's taking place. So cursor from this low, the expectation is that on any retrace back up now, we're going to find sellers against some type of consolidation that we made without being able to take the high, because now the power dynamic is shifted from buyers being in control to potentially sellers being in control now. So come up, and this may be your short area against this low, risk above this high, and that sellers defended right there. And then what we're looking for is this to be confirmed. I hate the word confirmation, but for this to be confirmed by now making a new lower low without taking the high. So we have this whole consolidation situation going on where we make a slightly higher high. And then right here, can't take the high. Sellers are defending this area, right in here. And then right here is the first time that we make a new rotation low. So by using law of motion, what you're essentially doing is saying, hey, I don't want to step in front of a market that's moving in the opposite direction of the way that I want to be trading. So you're waiting for that force participants to be pushing it from the other side and giving you an indication of, okay, now we've potentially went from a market where buyers are in control at the moment to now where sellers could potentially be in control. So this is your move below, and then look where the high comes in. Once you get this low, just draw a line at the high. The high comes in at the lows of all these consolidations, right? So now we're starting to make rotational highs and lows on a one time framing down basis. So, if this is your entry, then you're just sitting in this. You probably have some scale down here. And now we start breaking down, and now you're in the trade as it's starting to make these lower lows and lower highs. And now the trade is starting to work in your favor. So it's keeping you out of an area, even though you want to be short against this, expecting that sellers can defend, it's keeping you out of the trade while they're not able to do it. And then, you start making these lower rotational lows and highs. You can see them coming into cash session, which is right here. Cash session opens, and just keep doing the same thing. And then I'll show you the trade that I took this morning. There we go. So it was the same type of thing against range long. So this is an area where we expect buyers to defend. They'd already defended it when we started the Globex session right here, right? So the overnight low was 26.75. So as we're coming into this, now I'm starting to look to the long side. I want to see a rotational high being tested. So rotational low, minor rotational high, rotational low, rotational high. So if, you know, a small rotational high, here's your true rotational high, and now we have a new low. So this, on this new low, this becomes your rotational high, right? Unable to take it, a new low. There's your rotational high now. And then right here is the first spot where we push above the last rotational high. So right here on this move, this was the overnight low too, right here at 26.75. So buyers push into the overnight low, sellers defend it from above. And the trade that I took was along at 41.25 quarter. And it was based on just, so this high, right? This high that we had after this last push up was 41.25 quarter. So my long was right here, 41.25 quarter, because now we have potential that buyers are in control. Long against 41.25 quarter right here. Risk, I always use the low of the consolidation prior to the actual low or the high, vice versa, where it is. So long right here on this move down. Risk was under this low right here. So risk was at 23 quarter. And the low of the session was 23 even. So my risk was one tick above, one tick below this low, one tick above the low of the session right here. And my expectation is either that buyers are now going to be in control because we have this potential power dynamic shift, or obviously if they're not, this price will roll over and I have 2 points of risk in a trade that I'm going to be taking a stop on right here. Obviously buyers stepped in, they got this push up, etc. And now we start making these, you know, on my execution chart, series of higher lows and higher highs. Does that make sense? That's the trade I want to talk about today. Let me share this. And that's really it. So I hope that makes sense. Something that you can do to, again, stay on the right side of, stay on the side of the market that is, that has in control. So if buyers are in control, you want to be long side, and sellers are in control, you want to be short side. This is the offer that I put together for you guys. I don't have trials on the site, but just want to make sure you can see this. Nate, can we see this?
Yep, looks good. Sorry, I had to close a few
All right,
switches
cool.
there.
Yeah, just making sure the YouTube recording is delayed versus the Zoom. So I'm still
yeah, if you look at the YouTube, it's like 30 seconds and then you're
Yeah,
questioning everything.
Yeah, totally.
No, it looks good. The link is
so-
there in the chat, everybody, too. So we definitely encourage you. He's going to give you some more details on this, but I just want to let everybody know that link is here in the chat. So definitely hang on to that, grab it, click it now.
Very cool. So, yeah, so this is the offer. You'll get access to every instrument that I do analysis for. This is hand-done analysis that I use for my own trading, and I have clients, other traders that use it as well. So the markets that we cover are ES, YM, NQ, 6E, CL, and GC. There's an indicator for multiple different platforms. That have a list of them right here. And this trial is $97. The normal monthly subscription rate for all 7 instruments is $347. It will rebill at $347 after the 2 weeks. So what you can do is take the trial. Maybe you only trade ES, but you want to see how this works on other instruments. And then feel free to cancel the trial and re-sign up for the single instrument that you want. Included in this trial is so the indicator, so the analysis is done. It's a written analysis. You'll have it in written form, so text. The indicator enables you to plot the analysis on your chart. So what we just saw on my screen. And there's a one-time lifetime license fee for that indicator. I'm waiving that fee for the life of any of these subscriptions. So, so there's that. And then also, if you want, so that's something that you can do kind of on your own, use the analysis on your own. Also on May 22nd, I am starting another small group mentoring program where I'm working individually in a small group with different traders. And there's a lot of cool things taking place there. So this is going to be the third one that I've done, wrapping up the second one right now. And that's where you're going to get, so you get pretty cool things. You get an actual lifetime license to the indicator. You get, highly personal access to me during live markets. We'll be in Zoom together, looking at live markets. And the program is, so there's parts of the program that are set, but then the rest of it is really designed to help you improve as a trader. So there's an intake form that you'll fill out, and I will go over that. We'll have a series of meetings and discuss what it is that you really need to work on. And it lasts for 4 weeks. So again, we start May 22nd, lasts for 4 weeks. And it's something to do if you are, if you really want to either, if you're not consistent and you're looking to become consistent, or maybe you are and you just really have some things that you want to fine tune, this would be a great opportunity to get those things taken care of. So all that being said, that's pretty much what I have for you. I'm happy to look at any markets that we want to look at or talk about anything else.
Awesome. I'm just coming back in here and my video's looking a little wonky. There it is. Go ahead and fix this. I think people have seen this before. There it is. There's your Zoom quick fix. Well, thank you so much, Tony. As you can see here in the chat, we do have that link available to you. As he outlined, you'll get a 2-week trial. You'll get every instrument he covers. You'll get his handwritten analysis. This is his personal trading plans. This isn't just something he's throwing out into the ether. This is something that Tony is doing himself. So everything that he's sharing here is according to his personal trading plans. So definitely grab that. He's waiving fees completely for the indicator if you jump in. He's going to give you access to all of them. He's very flexible as far as which markets you want to cover, if you want to downgrade, upgrade anything with that trial or that subscription. So definitely take advantage. And then, as mentioned, with his group mentoring starting next Monday, the 22nd, Tony, is there a place we can send people for that one, or do they just need to get on your list, or how can they find out more about that?
If you're interested in that, just go to the site. Send me an email. My email's listed on my site. Just send me an email saying, hey, saw you on Profits at Noon, interested in the group mentoring program. And then I will get back to you that way. You can also send me a DM on Twitter if you want. My Twitter is TraderSmarts. Either way works.
Awesome. Great. So yeah, hit him up on the website. You can find him on Twitter as well. As mentioned, Tony is very much involved on a personal level with all of this stuff. It's one of the great benefits, in my opinion, of working with him. Whether it's working with him in this arrangement or this basis, or as a client. It's just been, we've had nothing but great experiences with him, and the feedback has always been great. So definitely take advantage of this trial offer. Hit him up, learn more about this coaching opportunity if you'd like to join the group mentoring that starts next week. And then Tony, as far as I know, we can count on you coming back for the next session, yeah?
Absolutely. I will be here.
Awesome. Fantastic.
Awesome.
Well, we got Tony here for the week, I believe. So everybody will be back, of course, on Wednesday at noon Eastern time. We'll do our levels to lock, the analysis with Richard, of course. And then Tony will be back to share some more with us. I don't know if you have another setup in mind or what we'll be covering, but definitely looking forward to it.
Cool. Sounds good. Yeah. One day we're going to talk about journaling and trade logging.
Oh, excellent.
And then on the other day, I don't really have anything specifically planned.
Okay.
But I thought maybe we could just kind of look at markets and take questions.
No, that'd be great.
That'd be great.
Yeah, that'd be great. We're actually enjoying that. And it seems Thursdays lately has just been a busier day for a lot of people. So we've just kind of allowing the audience to a certain extent steer some of this stuff, make requests. So keep that in mind, everybody. If you can join us on Thursday, we're going to kind of open that session up a little bit. We'll have both Richard and Tony in the house providing analysis and insights. So it'd be a great opportunity to pick both of their brains. And of course, our favorite thing to see in these sessions is when two different analysis methods align. So we've seen that a lot between Richard and Tony. They may be using different methods, but the end result, they're identifying similar, if not the same zones on most occasions. So it's very fascinating, lots to learn. It's a great opportunity. So yeah, join us for the follow-up sessions. Again, if you're new to these sessions, we are live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern time. Just one more shout out to to those joining the simulcast over on YouTube. Thank you so much for being here today. If you would like to join us within these Zoom sessions, there is a link beneath the video where you can register and receive reminders, get that VIP treatment here directly in Zoom with us. All that said, I believe we're at the end of the hour here, so if anyone has any questions, anything on their mind at all, please feel free to fire away there in the chat, and we'll be happy to take a look. And you know, Richard, much to my own chagrin, I do not have a dad joke prepared just yet here today.
I think that's going to wait for Wednesday.
So we'll have to wait. So you'll have that to look forward to as well on Wednesday, the return of the dad joke. So if, you know, and I'd like to open that up actually, if any of the audience, any of our members here would like to submit dad jokes for the future, we're more than happy to share in the fun that is terrible puns. So
just keep it clean.
Awesome. Well, thank you guys so much. Any parting wisdom for us today, either of you gentlemen? Oh, I see.
Tony dropped off there, unfortunately, but yeah.
I do see Tony dropped off without even so much as a goodbye. No, I imagine he had a technical difficulty, but Tony will be back on Wednesday. And no problem, Jackie. Actually, you know, I was speaking to Kyle about this. I believe it was Thursday or Friday. I can reach out to him and confirm. I can't say definitively in this moment because I've been flying around a bit this morning. But I tell you what, Jackie, I can check with Kyle as soon as we get off here and see if that update has rolled out just yet. If it has not, I will see as far as the expectancy on that, what date we can look for. And then I believe I should be able to find you in one of our client member groups as far as being able to reach out. But if not, of course, we're back here on Wednesday. But I'll be happy to chat with Kyle and find out more on that.
Awesome.
Well, fantastic. Thank you so much, everybody. We will see you
thanks,
again
everyone.
on Wednesday. So everybody take care. In the meantime, have a great week. Feel free to reach out to support if anything else comes up, and we'll see you again soon.
Awesome. Take care, everyone. Cheers. Bye-bye.
Bye-bye.